How do you identify a franchisor before the world realizes its value? How do you invest in the platform layer instead of the location layer and position yourself to benefit from the exponential phase of growth instead of the linear phase? I'm Justin Kaiser, co-founder and CEO of Empire Franchising, and for the last 24 years, I've built, scaled, and invested in scalable businesses, including my own franchise brand, taking it from 0 to more than 100 franchise territories before an exit. And what I want to do in this video is take you inside of Empire and show you exactly how we identify high-growth franchisors before they become obvious. Because once they become obvious, the returns are already compressed. The opportunity has already been arbitraged, and the asymmetric upside has already been captured by those who moved early. The single biggest mistake that most people make is they invest in the visible layer, the franchise location, the store, the unit, the linear layer, instead of investing in the ownership layer, the franchisor, the platform, the entity that collects fees from every franchisee, the entity whose valuation expands as the system scales. Because franchising is not just a business model, it's a force multiplier. It allows one central entity, the franchisor, to expand across cities, across states, across countries, without deploying the capital required to build each location. Franchisees deploy the capital. Franchisees take on the operational risk, and the franchisor captures the leverage, the royalty streams, the franchise fees, and the exponential increase in enterprise value. When you understand this, you realize that the true opportunity is not simply owning a franchise. It's owning equity in the franchisor. But not every franchisor becomes valuable. Most never scale. Most never achieve an escape velocity. Most never reach the inflection point where valuation expands dramatically. So the real skill, the real discipline is identifying the franchisors that will scale before they scale. And this is exactly what we do inside of Empire. And it starts with understanding that the franchisor value is not created by selling franchises. It's built by building a replicable economic engine. Because a franchisor is fundamentally a distribution platform. And what we look for first is unit economics. Because if the unit economics don't work, nothing else matters. We analyze the average unit volume, the margins, the startup costs, the payback period. If a franchisee can't recover their investment within a reasonable time frame, growth will stall. Capital will not flow into the system. But when the economics are strong, when franchisees can recover their investment quickly, demand accelerates. Growth becomes self-propelling. And this is the first signal of a scalable franchisor. The second factor that we analyze is replicability, because scalability is not about whether something works once. Scalability is about whether something works consistently across different owners, different markets, different demographics. Because the franchisor does not control the franchisees. The franchisor provides a system. So the system must be robust. It must be simple. It must be executable by operators of varying skill levels. And when a system produces consistent outcomes across different franchisees in different markets, that is when scale becomes inevitable. The third factor is category positioning, because certain categories are structurally advantaged. Categories with recurring revenue, categories with fragmented competition, categories with strong margins, categories with long-term demand tailwinds. These categories produce the strongest franchisors because they create predictable revenue streams, and predictable revenue streams produce higher valuations. The fourth factor is leadership, because franchising is not just operational, it's strategic. It requires leadership that understands platform building, leadership that understands brand, leadership that understands capital allocation, because the franchisor must continuously invest in growth infrastructure, marketing, systems, support, expansion, and leadership quality is often the single greatest determinant of whether a franchisor achieves scale. The fifth factor is structural leverage, because franchisors are unique in that they scale with limited capital requirements. Franchisees deploy the capital. The franchisor expands the system, and this creates operating leverage. Revenue grows faster than expenses. Margins expand and valuation expands. And when you combine strong unit economics, replicability, category positioning, leadership, and structural leverage, you have the foundation of a high-growth franchisor. But there's one more critical layer: timing. Because investing too early carries execution risk, but investing too late compresses returns. So, what we target is the inflection point, the point where the model is proven, but the market has not fully recognized its potential. Typically, this occurs after the first few successful franchisees, when the system demonstrates replicability, but before institutional capital enters. Because once private equity enters, valuations increase, and early asymmetry disappears. And this is why Empire focuses on identifying franchisors at the pre-institutional stage, the stage where validation exists, but scale has not yet been fully priced into the valuation. And when we invest at this stage, we position ourselves at the platform level, because platform ownership captures exponential upside. Every new franchise sold increases enterprise value. Every royalty stream increases recurring revenue. Every expansion multiplies valuation. This is how wealth is created at scale, not by operating individual units, but by owning the platform that scales across hundreds or thousands of units. When you understand this, you begin to see franchising differently. You stop thinking like an operator and you start thinking like an owner, like an investor, like a platform builder. And this shift in perspective changes everything. Because instead of asking, how do I build one business? You begin asking, how do I own the system that builds thousands? And this is the philosophy behind Empire Franchising. We don't simply build franchises, we build franchisors. We build platforms. We build scalable equity engines designed to expand across markets and create long-term enterprise value. If you want to learn more about how Empire identifies and partners with high-growth franchisors and how you can participate at the platform level, visit empirefranchising.com and subscribe to this channel, because this is where we break down the strategies, structures, and the systems behind building scalable ownership, scalable equity, and scalable wealth.